Johor CEO Roundtable for IFRS on Sustainability Disclosure Standards. Today's event will kick off with a welcoming remark by Mr. Eddie Suresh, followed by a presentation on the IFRS questionnaire results by Mr. Manohar Johnson from PwC Malaysia. Then, dear participants, we will pick up all the questions and the sharing session by the, of course, participants, and that will be moderated by Mr. Faros, the Executive Director for UNGC. For those who are joining us online, please type in your questions or comments in the chat box so we can also flash them to the panelists. I would also like to invite all our participants who are joining us virtually to also open up your camera, because today's recording will include the Zoom session as well, and the panelists will also be able to interact and see you based on your camera at home or at your office. Okay, without further ado, I would like to now invite Mr. Eddie to give his welcoming remark. Yes, sir.
Good morning, Dato, distinguished guests, ladies and gentlemen. On behalf of the UN Global Compact Network Malaysia and Brunei, PwC Malaysia, and Edicity Iskandar, I would like to welcome all physical and virtual participants to this roundtable session. Ladies and gentlemen, the International Financial Reporting Standards, or IFRS, announced the formation of the International Sustainability Standards Board, or ISSB, on the 3rd of November 2021 at COP26 in Glasgow. The intention of the ISSB standards is to cover important sustainability topics encompassing environment, social, and governance, or ESG, on whichever investors want information. It will begin with climate due to the urgent need for information on climate-related matters. ISSB is developing a comprehensive global baseline of sustainability disclosures for the capital markets. The two standards, which is general sustainability-related disclosure requirements and the climate-related disclosure requirements, exposure drafts were built upon the recommendations of the Task Force on Climate-Related Financial Disclosure, or TCFD, and incorporate industry-based disclosure requirements derived from SASB standards. When the ISSB issues the final requirements, they will form a comprehensive global baseline of sustainability disclosures designed to meet the information needs of investors in assessing enterprise value. The ISSB is seeking feedback on the proposals over a 120-day consultancy period closing on the 29th of July 2022. The ISSB aims to issue the new standards by the end of the year, subject to feedback. The feedback to the exposure drafts on climate and general sustainability disclosures will be compiled and submitted to the IFRS Foundation by UNGC MYB and PwC Malaysia. This is why we have gathered here today. Ladies and gentlemen, I thank you for supporting this engagement. I wish you all a productive and insightful roundtable session. Thank you again.
Thank you very much. Okay, so the time that we are excited and waiting for is a presentation by Mr. Manohar Johnson, who will be presenting the IFRS questionnaire results. Continue, sir.
Thank you.
The floor is yours. Thank you.
Good morning, everyone, ladies and gentlemen. It is my pleasure to meet all of you here virtually and physically. Definitely in a post-COVID situation, it's very nice to be able to have some form of physical meeting. Although some of you who I've only maybe met virtually before are somewhat surprised at my height. And I always say that Zoom never does me justice. So welcome anyway to those also who are joining us virtually. I do see some familiar names, and I do hope that you will raise your questions in the chat group so that later on after my session, when Feroz takes over, he will be able to take on board some of your questions and hopefully answer them. So I thought I'll sort of set out the slides really by talking about the current landscape in Johor. And given that this was actually designed really to speak to the CEOs and the key people in the C-suites here in Johor, I thought it was very important to set up what ails Johor at this point in time. These are some of the data and statistics that we gathered last year when we were doing a strategic study for the state. It's very interesting that some of the metrics where Johor does the best, unfortunately, is in the wrong category. So when we talk about saving water, about being careful in our water usage, right? It is a little bit scary when we think about Johor's consumption being the second highest in Peninsula, only second to Selangor, right? And the per capita use is 35% ahead of what is recommended by the UN. In fact, if you compare even to Singapore, right, at 222 liters per person per day, right, we are far higher than their 141. And we have a long way to go towards our target, our national target of 180, right? So that itself gives you a little bit of flavor to one of the biggest sustainability issues that is afflicting the state. Let's move on. Also another unwanted record, we have the highest number of polluted rivers in Malaysia, right? And these, as we know, creates many kind of consequential impact, right? To our quality of life, to the availability of water, not just for domestic use, but for many of us who own our own factories or manufacturing plants and whatever type of industry that all of you are operating in, this therefore becomes a risk. Now, if you look on the left-hand side, it's very interesting to note that in 2018, which was the last year we have a full set of data, Sungai Kim Kim was only ranked at number 3, right? Which was suitable for livestock drinking. We all know what happened a couple of years right after that, right? They may not even be more at 5, they may be beyond 5, right? They may even be deemed toxic already, given what the problems that they faced at that point in time. So we can also see that water quality and supply continues to remain a problem. Sorry. Waste management. I'm sure you have all found how difficult it is, right? In terms of dealing with your industrial waste, with your effluents, right? How do you get them to the right landfills when the landfills are all full, correct? And what happens then? How do you dispose of them in a safe and caring and a sustainable manner? While the planned waste to energy plants, right, are currently ongoing and will be constructed hopefully within the next few years, there is also recognition that more needs to be done, because that over-reliance on landfill dumping at 69% is clearly seen as not being supportive, right, or being sufficient to meet any kind of carbon reduction goals. So definitely food for thought. I'm sure many of you have already heard about this, right? This was a Think City review that was done a couple of years ago. And for those of you who claim to be Bangsa Johor and who have lived or worked in the state for many years, this is something that individually you would have already started feeling. 6.7 degrees in just a matter of 13 years is really no laughing matter. And if steps are not taken in terms of achieving low carbon targets or even carbon neutral targets, you can only imagine how much higher this is going to get. I'm sure many of you have seen the news over the last few days about the heat wave that is being faced in Western Europe, right? Record temperatures in countries like UK, etc., right? Bushfires and so on. So it's not far-fetched to imagine that if this is not contained, the effects will also be felt here, not just in the rest of Malaysia, but also in Johor. So what have we done, right? Sometimes it's easy to talk about it, but not walk the talk. And so in PwC Malaysia, a couple of years ago, even during COVID. We actually committed, we say that worldwide, but it's also applicable to Malaysia, to reach net zero by 2030. A very ambitious target, right? But something that we felt that we put our heart, mind, and soul to it, we can achieve that. What did we do in terms of the pathway to net zero? These were the 4 major steps that we did. First and foremost is doing your assessment of the risk and the baselining. Once we have done that, we then came up with a strategy plan in how do we go towards achieving net zero. And that looked at all aspects of our business. So just because we are auditors, just because we are consultants, just because we are in the service industry, it doesn't mean that we don't also emit GHG into the atmosphere. And later we'll share with you what our carbon record is. Then it also means that we are organizationally transforming ourselves. It's good to tell others, right, as consultants, how they need to come up with proper sustainability targets or with a strategy. But if you don't walk the talk, then it makes no real meaning. And so we have also done a lot of changes internally, which we'll share. And last but not least, of course, is the whole aspect of reporting. So I'll take you now through our 2021 annual report. This is actually available online, and it covers many aspects of PwC Malaysia's line of businesses and activities. I just took out the part which talks about environmental sustainability and net zero. Now, I'll make a disclaimer right at the start that do these disclosures meet the full requirements of, say, GRI or TCFD or even the draft standards? The answer is no. We have also got our work cut out towards working towards what is required or what is going to come. But we thought we will make a start and at least try and disclose what we are doing, and over time expand that to meet what are the disclosure requirements. So we put the 3 main areas in terms of our net zero commitments. We talked about reducing absolute scope 1 and 2 by 50%, scope 3 business travel within the same timeline, also talking about working with our suppliers in terms of their climate impact to us, and eventually looking at 100% renewable electricity. Right? Some of this may be familiar to some of you because in some way you might also have adopted some aspects of these kind of targets. Do we need to be more ambitious as the planet gets hotter? Maybe so. I really don't know. Other areas, of course, is working with our stakeholders. So using the PwC skill sets, right, and presence, including here in Johor, talking about advancing non-financial reporting. So today's conference for me in a way is ticking the box on that. So at least I'm sharing this message with all of you so that everybody works together because we all know that the climate doesn't just impact one company or one location as we have seen. And of course the implications of climate change into our clients' work is already been ongoing for a couple of years. Even in my audit procedures, there's a specific procedure and task where our teams have to ask very specific questions from the C-suite in terms of how climate change impacts them and other ESG, social, for example, related factors. And in terms of the public policy discussion, this is where hosting this event and sharing our feedback to the ISSB and the IFRS Foundation on the standards helps, because it helps to pull together how people feel about the factors that address climate change, including sustainable standards. So these are the measures we have put in place at a very high level. Some of the governance measures, creating a net zero lead partner, her name is Pauline. Also having a group of partners across our various line of service to provide a one firm, talking about measurement and disclosure, and also one of the things about offsetting, right? Carbon offsets and so on. We have also joined LEAF, which is the Lowering Emissions by Accelerating Forest Finance Coalition. And this is what we think will be one of the largest public-private efforts to protect our tropical forests. And you can see how the flight emissions offsets where the money has gone to. And so what do we do internally, right? We talk about reviewing our energy usage. I like that part about reducing flights. I know every time I have to now fly to KL for a meeting, right? The first thing my net zero partner asks me is that, why did you just cycle up instead? Right? So there is pressure to do more virtual meetings, right? Minimize the number of flights and other travels that you need to do. Process improvements, of course, that continues to be internally. I like this idea of using DocuSign. That I can see directly has impacted a lot of savings to me, because there was a lot of paper documents that I used to sign previously that now I can just do it on my handphone. And that saves, as you can see, almost 84,000 pages of paper. And even our HC recruitment team, our talent management team, our normal payroll personnel have moved a lot of their documents online to save that. Supply chain, definitely, we are working with them. From a business risk, as I've told, I think maybe some of you here, physically or those on the call, right? The risk to PwC, just like you guys, is that at some point in the future, if we are not committed to net zero, you are going to come to us and say, we cannot have PwC as our auditors because they're not committed to it. Just like what you're doing to some of your suppliers already, right? So it is a business risk, even to us as a service organization. Building the ecosystem. So some of you may have heard about the CEO Action Network, CAN, primarily generally working out of the Klang Valley, but putting in really leading things on capability, awareness, etc., and sharing best practices. Last but not least, of course, also upskilling our people. So we have spent a lot of time on client-specific training, general e-learns, etc., so that we ourselves are aware of our impact to the environment. So this is the one where the numbers, I'm sure you all will be looking and comparing with what your own numbers are, right? So our carbon emissions by 3 scopes, right? If you add in scope 1, 2, and 3, was about 6,000 the last year before COVID-19. As expected, it dropped a lot in the last 2 years because we cut a lot of our flight and travel time. But even at 6,000, right, tons in 2019, and we expect FY22 onwards to go back to those levels, right? It still feels a lot for us. So we're trying to see how much of that can we reduce to the bare minimum and then eventually offset the rest in some sustainable manner. So that's just a brief background of what PwC does and how we are disclosing. Now I'm going to move on to the results and analysis from the questionnaire. I must say that I did hope there would be more responses. I do thank those that have responded. We've got a total of 4. But as Eddie has shared, the closing date is on the 29th for us to respond to the IFRS Foundation. If any of you still have the time, please do so. And we'll also be taking feedback from today's roundtable in helping us frame our responses. So I've selected a couple of questions and what were the responses to them. This is hopefully just to give you a flavor of what the requirements are so that in your own organization, you are starting to prepare for this. Okay, so the first one is really maybe looking at the auditors and the regulators, right? In terms of whether there was enough for the auditors and regulators to sign off on your sustainable statement once this goes into force, right? So you can see there were 3 people who said yes, 1 said no, and the person who said no commented that maybe the audit requirement should be set according to the size and stage of the entity and the type of industry. Maybe that's something I'll leave for Feroz to share his thoughts about it, because interestingly, unlike IFRS standards, right, climate change affects everybody. So it's a bit difficult sometimes to think that if you're small or you're not listed, your impact is lesser. And that's the very interesting discussion, right, that happens about sustainability. The other part of the question was somewhat leading to that, and this was whether the exposure draft can be used by those who don't apply MFRS or IFRS in their financial statements. What if you're a smaller company and you're using MPERS? Or what if you're a government agency, right? Or the state government, and you're using MPSAS, which is the public sector accounting standards, right? And I think the unanimous reply is that it actually can be used across the board by any type of organization. Then there's also a requirement to disclose sustainability risk and opportunities related to activities, interactions across your value chain that is capable of consistent application, right? Unanimous approval for that. The next one was, how do you explain the connection, right, between sustainability risk and opportunity? I like that comment that came back from the person who said no, is how do these two things connect, right? And if you look through the draft standard, it tries to provide that linkages, but ultimately it's really the business that knows best what is that link between your sustainability related risk and what is the impact that gets shown in your financial reporting and statements. Then there's also a question about the sources of guidance on how do you identify sustainability related risk. So for example, we all know Bursa Malaysia has come out with some requirements. The Malaysian Code on Corporate Governance has also come out with some requirements. I think there was a comment there that when we talk about the SDGs, they also are a very good source of what are the risks and what are the actions that are needed to be taken, which I think is a good point for the standard setters to think about, right? The next one maybe carries on that point about sustainability related disclosures to be consistent with the financial data. And for any of you who have always looked at the calculation of fair value, if any of you have always dealt with impairment with your auditors, right? You know there's a lot of projections that go into these numbers, discounted cash flows, discount rates, right? Useful lives, and etc., etc. So in the context of fair value, then sustainability risk becomes important, right? It's no use assuming that your building is going to have a remaining useful life of 20 years in your projection, when you know 10 years from now, because of rising sea levels, you will have to move, right? So there is a link. Or if it gets too hot, right, you will have to think about where your appropriate location to do business is. And so the standard is trying to link that sort of sustainability risks and impact to how you prepare your financial statements. Definitely food for thought for every one of us here. This was also an interesting, this one. Eddie said about the standard setters hoping to have the standard out within the end of the year, but generally most felt that a certain amount of time is needed before they would be ready to apply this standard. And the reality is that part of the reason I believe this is happening is because unlike maybe IFRS standards, right, which, or even when we talk about the MPERS, the local variant, you find that many people are adopting sustainability measures, including all of you here, just that you may not fully be doing everything that the standard wants you to do. So when the standard is as prescriptive as it is, the danger, and I can understand now why people need more time, because you haven't even started planning for taking on board that activity operationally. How do you even disclose what you have done? Right? And it becomes somewhat embarrassing, I guess, if the standard says, well, you're supposed to disclose your strategy over sustainability risk, and you're like, well, I don't have really a clearly defined strategy. That becomes a problem then. So it'll be interesting to see how much time they give before the standard becomes mandatory. Of course, the expectation is each country will adopt it at its own pace. So how soon will Malaysia adopt this will be, I guess, governed by a series of factors, right? What is the pressure from investors? What's the pressure from regulators? What's the pressures from other type of people in the value chain who want to know more about such things? The digital and the taxonomy is probably the ease of how these standards can be collated. Right now, I think it's safe to say that most of us operate out of an Excel spreadsheet, right? A lot of this data is very manually captured. So the question is that how, by using a proper taxonomy and using technology, how much of this can be built into an IT system, somewhat similar to how IFRS standards now have been built into an IT system, right? So your finance function can easily produce a set of management accounts at the end of the month. The question is, can your sustainability officer produce a set of metrics at the end of every month, right? And driven by the use of IT to make that possible. So the idea of this standard is also to involve the use of technology to facilitate that process when the standard eventually comes into existence. So these were the key questions on part 1 of the first standard, and the first standard is really the catch-all general standard, as they call it. S2 is the standard on climate-related disclosures. Now, some of you may be thinking, oh, what about the standard on labor issues, right? What about the standard on other parts of sustainability like governance, etc.? According to the IFRS, is akan datang, right? So it's going to come. These were the two that they have so far come out with. So in the IFRS 2, or S2 as they call it, these were some of the questions that I picked out, right? And the interesting one is about the applicability of disclosure topics by industry. And I think the second comment at the bottom is quite good, in the sense that helps, because then you can compare within industries. If you're talking about healthcare industries, right? If you're talking about trading industries, if you're talking about manufacturing, automotive industries, steel industries, and so on and so forth. The transition plan, I think generally there is unanimous approval of it, because everybody recognizes that right now, maybe not everyone formally has got a climate transition plan. And so time is needed to assess and prepare for that before you can think about disclosing what your transition plan is. Another one is about the opportunities. So the same thing like what we talked about in a general situation. How do you talk about the financial effects of climate risk on your financial performance? So if you're a plantation company, right, do you then are ready to be able to say, if the temperature in Johor increases, it's already increased 6%, I'm not sure what's the impact on plantation or palm oil yields, for example, in Johor, but if the temperature increased by another 6%, right, what does that mean to a planter? And likewise to each of us in our own organizations, and disclosing that effect. Same thing on the short, medium, and longer term. So not just looking at current impact, but the longer term. And so there was a feedback. Someone said, well, maybe for the smaller companies or the non-listed companies, maybe you don't need to do that, because you're also talking about the costs of being able to prepare such information. So food for thought. And of course, there was another comment about not just about local agreements, but also any national level agreements or regional climate agreements that might be in place. There's also this point about performing climate-related scenario analysis and whether alternative methods can be done. So I think the proposal is to allow alternative methods, given there's a current diversity in practice, and I think the respondents were generally supportive of that. The next one, the 7 cross-industry metric categories, right? So this is very interesting, because when you go through those 7, emissions on an absolute basis and intensity basis, transition risk, physical risk, climate-related opportunities, capital deployment, right? So CAPEX towards climate-related risk and opportunities, internal carbon prices, which is what you set internally as like a KPI, so that your business units are going green as much as possible, And last but not least, the percentage of executive management remuneration that is linked to climate-related considerations, right? So this is basically saying that a certain percentage of your bonus is dependent on you achieving certain carbon targets, right? So again, two said yes, one said not applicable. Interesting to hear the feedback from the floor, right? Does this become a common KPI for everybody's business? And then you disclose how you're working towards it? Or are some going to say, well, I really don't want to put executive remuneration as part of my KPI. And so if you're not doing it, how then do you measure your achievement and your strategies? Or you take it that you're doing it in a different way. So this is where the disclosure standards are going to pose a problem for corporates, because if some of you already don't have this as part of your strategy, trying to adopt this and put in the systems can be a challenge in itself, even before you think about disclosing or reporting the outcome at the end of the financial year. Okay, additional cross-industry metric categories. There was a comment about also putting in SDG 13, which has got its own targets and indicators that relate to climate action. Interestingly, for question 9C, about entities required to use the GHG protocol, there was one response that said not applicable to our nature of business. So again, food for thought, right? Are we taking it that maybe smaller enterprises, right? Your chap fun stall, right? Or your chicken rice shop, or your local pisang goreng seller, right? Doesn't need really to talk about how he's emitting, right? Where do you draw the line? Right? Or do we take it that everybody is a whole of society approach, and therefore everybody should try and take some measure towards measuring their scope 1 and 2 and 3. Knowing, of course, that I think for those of you who have worked on this, you know that scope 3 is very difficult, right? But do we have to do it anyway? And then there's also an even further disaggregation. This was something new that I learned, right? So it's an accountant trying to learn scientific topics, that apparently there's 7 types of greenhouse gases, right? And so the question here was whether you aggregate them when you show the results, or do you break them into each of their constituent parts for disclosure? And you can see from the comments at the right, I think more people probably feel that it should be on a more voluntary basis. Then, of course, when we talk about the nature of your business and how your legal structure is, nowadays there's a lot of collaboration that takes place. So not many companies are subsidiaries, right? Or parents. There's a lot of JVs, joint ventures that take place. There's a lot of what we call unconsolidated subsidiaries or associates. So what about matching their impact? Computing their impact. What about disclosing that? And I know for those of you guys who sit at the top of the chain at the corporate level, right? We know that when you have a JV or an associate, it's hard to influence the other party, right? Because you're only a minority, this one. But yet, they may be in a business that actually is the one that's emitting the most amount of GHG, right? So how do you influence that process? So it's also still an open question. I'm sure those of you here will have your own views about that. Okay. On latest international agreement on climate change, I think there was a comment, as I said, to make reference also to the national agreement or regional agreements as they take place. I guess this is saying that beside, I guess, what is agreed at, say, the Paris Agreement or the COP26 or the next COP, what else is also done at the local level? The GHG protocol on the corporate value chain, accounting and reporting standard to provide the proposed disclosures on finance emissions. I think there was no comment. Generally, they felt that should be the best standard to use. Industry-based requirements, I think the SICS seems to be the most accepted classification. And so that seems to be the main guide that IFRS is also using in terms of the specific industry-based requirements relating to climate change. Nobody felt that any of the disclosure requirements would be difficult to be verified by the auditors and regulators. I must say that I personally, as an auditor, I feel that I think we have a lot more learning that we need to undertake. If we spend easily 3 to 4 years completing our accounting degree, right, and learning the nuts and bolts of accounting standards, I don't know whether the same amount of time is needed to really and truly understand sustainability risk, right? Sustainability requirements. How does GHG get computed, right? How do you audit such information, and etc. and so on, right? Because as you all know, the other risk that you start reading about is about greenwashing, right? So making so-called commitments but not really practicing them. So I guess time will tell how this gets enforced then. So that's the background to the standards. So as you can see, once again, thanks you to those who took the time to respond. We really value your feedback. For those who haven't, please feel free to complete the questionnaire. Eddie will be compiling it over the next 10 days or so, and then sending off to the IFRS Foundation. But you can see that there is a lot that is coming. How soon it comes, as I said, it really depends on how fast Malaysia wants to adopt it. But we all know that once it's adopted by globally, and especially by the US and the EU, the chances are likely that they will mandate that use in the other territories also. Because the risk then to us is the outflow of FDI, of investments, of not having the right amount of data to be able to share, that people will think Malaysia is not a safe place to invest from an environmental prospects. And why I say that, in closing, just 2 more slides. This was something that the World Wildlife Fund shared last year, right? That 50% of Malaysia's major export markets have net zero 2050 targets. And that's in 28 years' time. So you can see the value of our exports to leading partners, right? Out of close to 1 trillion, right? 80% have got either 2050 or 2060, very few beyond 2060. So as your export, your leading countries, your partners start to implement net zero targets, you can bet your bottom dollar that they are going to be pressuring you guys to also follow suit, right? And if you don't, the risk of the factories or the services being moved to another ASEAN country or outside of Malaysia becomes very real. And last but not least, my favorite slide, right? So this was a scientific study that Climate Coastal did, right? That shows that looking at the climate change effect and the rising sea levels, right? Places like Muar, Pengerang, interestingly, and the coastline of Pontian, right, are at very high risk by 2050. So if those of you who've got businesses in that area, right, those of you who've got families or you yourself are living there or you've got houses there, you have to think very hard whether it's going to be a safe place to live and work in or even invest in if steps are not taken to reverse these impacts, right? So with that, I end my session. Thank you so much. I hope this has been of interest to all of you, and I'll pass you back to the MC. So maybe it's my pleasure to introduce the Executive Director of UNGC Malaysia and Brunei, Feroz Nada, to lead us in the moderation session. Over to you, Feroz.
Thank you, Manu. Assalamualaikum and good morning, everyone. I'm Feroz Nada. I'm the Executive Director for the UN Global Compact Network Malaysia and Brunei. And it's really exciting to be able to moderate that upcoming discussion, especially with corporate leaders on sustainability topics. I think first I want to say Johor events are very disciplined. So far my events in KL, everybody off mask already by now. But as you notice, everybody has maintained. So well done on that. Thank you, Mano, for that great insights. I think before we go to the discussion, I also would just like to share a little bit. First, I want to share the UN alphabet soup lah. What is this UNGC? Maybe some of you first time hearing about the UN Global Compact. So we are an initiative under the Secretary General's Office, and we were created primarily to engage private sector in driving sustainability. We predate the SDGs. We are 22 years old this year, so we have something called the 10 principles. Businesses around the world commit to our 10 principles around anti-corruption, human rights, labor, and environment. Of course, the environmental issue of the day now is, of course, climate change. In fact, it's being called the crisis of our lifetime, right? Just this morning before coming here, I was watching CNA, and they were showing reports about the wildfires in France, and Italy has declared emergency because they have no water, right? And they've all attributed this towards climate change on this. But I also want to share, when it comes to the private sector and climate change impact to private sector, a very interesting research has been done by Moody's, in which in all the effects of, so we know climate change bring various impacts lah, but for the private sector, 3 major impacts. First is actually water stress, and especially for businesses in Malaysia, just FYI, Malaysia is actually a water stress nation. Ironic, yeah? Now every time it rains, we are scared, but Malaysia is a water stress nation. So water stress is a big challenge for businesses in terms of your continuity. The second challenge is actually heat stress. Now, a very interesting report by McKinsey has showed that heat stress is going to cause employees to fall sick and therefore reduce productivity of businesses as well. Heat stress is another very material issue for businesses. Third, material issues, of course, as we all know now, is floods. Flooding in Malaysia is a big challenge. And while Mano was sharing the map about the 2050 shoreline, right? That's a 2050 projection. These 3 material issues is a 2030 projection, which is just around the corner, right? And also from a climate change perspective, really what we need to achieve is not net zero by 2050, is meeting the Paris Accord of limiting 1.5 degrees by 2030. I think in a lot of the discussions, perhaps the cheekiness of the private sector to extend time as much as possible. We are trying to go beyond 2050, and then it's not my issue anymore. But actually, it's a 2030 agenda. That's really where we need to drive. And we are under no illusions that it only can be achieved if there's a government-private sector approach, because a lot of things need to be driven by regulation and things like that. But in the absence of regulation, at UNGC, we believe the private sector will fill up this role, has to fill up this role, because there's no 2 ways about it. Why? If you look at let's go back to the IFRS. Actually, at the end of the day, the IFRS is a tool for business transformation, because the ESG impact is becoming greater and faster for businesses. You've got lack of water suddenly, you've got floods, you've got these social issues which are impacting businesses. So for a long time, this risk was not factored in. Now you've got to think about this kind of risk. I'm sure in your leadership positions, you're now hearing new terminologies being put to the table for you, right? Of course, climate risk is one of it, but very soon you'll hear things like double materiality, right? It's not about just reporting how much money you make, but what is the impact of your business towards natural ecosystems, right? So it becomes a new demand from business. So sustainability has to be treated from a business transformation perspective. And if you look at the IFRS, at this core, is asking questions about business transformation. We can't do the way we are doing today. So a lot of the questions are now revolving primarily around strategy driven by the risk approach. But of course, I was in an interesting panel last week, and one of the panelists brought a very interesting classification of companies. So you got the lip service, those who are greenwashing. You got the defensive, those who are trying to keep up, and you got the offensive. And like in any business transformation approach, there's a lot of business opportunity to be tapped as well. So companies that are forward-thinking see every risk as an opportunity as well, right? So there is now a lot of research being put to the fold that not only will companies lose money if you don't take action, you're actually going to lose out on business opportunity perspective if you do not look into ESG risk as well. So that is a main crux towards the whole IFRS issues. A lot of times, a lot of technical terms will be used. Scope 1 lah, Scope 2 lah, Scope 3 lah, GHG lah, this lah, that lah. But we distill it away from a private sector perspective. It's actually value-based decision making by the leaders. Because sometimes it's not easy to take the ROI equation when something you got to balance, a short-term pain with a mid to long-term achievement, for example, right? So at the end of the day, at the sustainability circle, a lot of discussion is revolving around value-based decision-making. In fact, the IFRS is an output from something called the Value Reporting Foundation, which is a merger between the SASB and the IFRS, right? And they use the word value reporting because the end of the day is whether you're private sector, whether you're public sector, what is the value that you are bringing? I think sustainability, ESG has that true north. What is that value? And making money actually is not a value. It's an output. It's the value that helps you to bring the profitability that businesses bring to this. So there's one part is looking forward, creating value. The second part is how do I also create resilience for the organization? Now, if you look at COVID, if you look at the first 6 months of COVID, a lot of literature has been put out there is that ESG stocks outperform the market. There's a lot of evidence you can see this. But the question is it because they are ESG rated, or is it because they somehow predicted these challenges, went on the sustainability part, and when these issues affected, these shock externalities hit them, they were more resilient and more adaptive towards these issues? I think that's the case. It's because they became more resilient. So if your business wants to survive in a fast-changing climate world, not only from the physical side, there's also now we call it the transition side, right? Trade is starting to change, right? As a good slide by Mano is that showing our trading partners are committing towards climate action. They are putting in legislation that will change trade. So for example, EU has something called the Carbon Border Adjustment Mechanism. It means that if you want to export to EU, you must make sure your product is net, and that means extra tax, right? Just to illustrate, India did a stress test on this. For their steel import into the EU, it will cost them an additional 100 million euros a year. Who's got to bear the cost? It's the private sector who's got to bear the cost. So all this also means resilience for your business. So there is two ways to look at this. Strategy from a resilience and strategy from a growth perspective, because that's where the whole world wants to go. And I think especially for Johor, you must be cognizant to the fact that your closest neighbors, I say Malaysia closest neighbors, but especially for Johor, down south is very serious about this agenda. So serious that recently they are buying large hydro, which is considered green energy, from Laos. From Laos, they are importing energy into Singapore because it helps them to meet their net zero aspiration. Pass through tenaga into Singapore. But of course here in Malaysia, it's a challenge for us to get this kind of green kind of thing. So, but it just shows how serious that's going to be and how that's going to influence the businesses closest to them as well. So it's a trade issue, it's a survival issue, it's also a growth issue. So that's why the IFRS becomes very important to consider for businesses moving forward as well. At the end of the day, it's a strategic perspective, and as decision makers, as CEOs, you need to ask these questions and you need to treat sustainability as a business transformation process. It's not by the way, we'll appoint someone, it's a core part of strategy, and that's what the IFRS wants you to do. Strategy, and what is your plan to meet the numbers that you are setting yourself to put in place. So that's my ceramah for the day. So now I will keep quiet. My role now is just to ask questions, right? So following up through Manoj's sharing, I think I'd just like to warm up the roundtable. Again, we'll just keep this as an informal discussion. Please feel free to chip in and share your thoughts. From your leadership positions as CEOs, as decision makers in your organizations, perhaps you could share, how are you looking at sustainability from a strategic perspective? What are the factors is driving the strategy for you, maybe from a risk and even from an opportunity perspective? As the first question, just to warm us up before we go into the more technical and challenging IFRS document. Anybody would like to? Yes, please.
Very good morning. Edis is also the host for this event, so firstly I'd like to welcome everybody here. But before, I think, responding to the questions, if there can be a response to what was shown earlier, I'm not sure if there's confidentiality when we answered the questionnaire, but the first part, the one that said no is primarily us lah. So I just like to expand. The first thing, I think it is important when you do the standards reporting to consider size, type of company, and stage of that company. Because in any reporting, you can see that companies will have different priorities. I mean, if you're just starting up, your focus is financial sustainability. I mean, you got to pay your staff. You got to be able to, break into the market. You got to have some semblance of, of stability lah. So I think there has to be some differentiation. I do agree that, most companies will still have to look at it and should be looking at it, but it's not an even playing field. I mean, companies which are listed, companies which have positive cash flow and good P&L, I think has a bigger responsibility. Second is, what I've been hearing is the approach to, the attraction that you're trying to portray is from an investment perspective, because, or from a supply chain perspective. Because I think, would the investors invest in you if they're a certain fund, etc. But I think if you look at the nature of business in Asia, we're primarily, 56% of KLCI generally is GLCs. Another sizable chunk, if I estimate, let's say maybe about 25% or so, is family-owned businesses. So GLCs, and although they will have certain parts of the business listed, but the decision making is very different from using an investment pressure. So, what I feel is the biggest impact you can have, which will hit across the board, is if something can be put in the Companies Act. Because Malaysia Code of Corporate Governance is a suggestion, is a guide. And Bursa gives guidelines as well. SC, yes, SC will police the listed companies. But Companies Act catches everybody. And Companies Act is the one that captures the boards. And boards are the one who's going to make a lot of the decision, or agree or disagree to the management's direction. And as you pointed out, the remuneration of the chief executive and the top tier, it's decided by the board. So if things that can be pushed even gently into Companies Act, that will enforce reporting to me on a different level, as opposed to, Malaysian Code of Corporate Governance. If you look at the latest Companies Act 2016, if I'm not mistaken, the catch-all on that not only directors are responsible, but the executives are responsible if they had a decision-making role similar to the board of directors. So that's a scary catch-all, which I think, with the importance of what's being shown, of the results as what's being shown, maybe have more traction. Third is, I'm an architect, and Iskandar Investment Group and EduCity, a lot of the business is real estate. One factor that I think can also move the needle is looking at maximization of current assets. Because when a building depreciates, not just financially, but sustainability-wise, the impact on the environment is huge. You hear about the sick building syndrome, and which then translates to sick employees as well. Things like this, and this will be applicable to so many parts of the city. Maybe this is another aspect that we want to look at. How can you ensure, you have so many tools like smart building, smart cities, technology, as you mentioned, as a way to manage this, And if that takes into account, where do you actually do your work and how's that building? Potentially is another measure. Fourth, and most obviously, I was attracted by the heat map that you show and the rising tide levels. I think there's a good reason for businesses to move to Iskandar Putri because we don't have that problem. Both things, Iskandar Putri is clear. So, Ross, you've got to move from KL to Iskandar Putri. KL is also flooding all the time. But seriously, the one thing that we should, and maybe if the pressure can be put on the government and private, is decentralization. I think the urban sprawl, the floods events, is if economic activity is dispersed from centers, including Johor Bahru and PwC's office in Johor Bahru. So we look forward to you moving to Iskandar Putri. Yeah. So if that can be dispersed, and if this reporting actually encourage a certain radius kilometer from the economic center, I think that can also be useful. Thank you.
Thank you, Mr. Wan, for very interesting insights. And I think that was a good example of an offensive organization using climate as a sell point. But just a little bit of response to your insights about the institution driven by investors. In the Malaysia context now, every large institutional investors has launched their sustainability framework. Khazanah, QAP, EPF, and also PNB. So I think that will be a real impetus moving forward. In fact, EPF is making mandatory for their portfolio companies to have a net zero commitment plan within the next 2 years. And net zero means scope 3, which means suppliers as well. So that will have that trickle impact across board on this. Right, anyone else would like to share thoughts, comments? Yes.
Okay, well I won't shout as loud now then, so I won't project. Okay, so I'm from Newcastle University, just here down the road, and the home university back in the UK does have net zero carbon emissions by 2030 target. And we are now just beginning to start to work on that here. So we have our own sustainable committee. We're looking at that. We're working at very small at the minute to develop. We haven't given ourselves a target like that personally at the moment because we haven't had enough analysis. We don't have the team and the expertise here to actually set up a plan. The UK has 8 people in their team. I have 0 people in a team on sustainability at the moment. I have volunteers who are really keen on doing it and leading it. So we're looking at things very simple at the minute. We're looking at stopping using plastics, trying to get our water usage down by changing the taps and various bits and pieces. So I think we're working at it, but I think we are going to have, there will be a financial impact to us because we will have to employ people to actually do this, or to be able to support us to do this. And I mean, one of the questions I've got is there the expertise to get the right people in the region to actually advise us to actually how we do this? And I'm unsure of of being able to get the right people. I mean, some of the other simple things we do, it annoys my senior executives in the UK, but we've gone to no business class flights. I'm not exactly sure on how much saving that is, but we've gone to non-business class. In the UK, no one's allowed to travel in the UK on a flight anymore. Everyone has to travel on a train. That is harder for us in Malaysia because the train up to KL, and you know we get called up to KL regularly. I do feel guilty jumping on a plane rather than driving. So there are things that we're trying to do. Very much Newcastle UK is looking at scope 1 and 2, and I know that that's the easier things to get. Scope 3 is going to be hard. My last question is, I heard PwC talk about offsetting. Newcastle doesn't like offsetting. I think that there's a big question about offsetting. How much is this offsetting working, or is it greenwashing? That's the question. How ethical is the offsetting? So I think that that's something we do have to look at as we go forward. So that was just a couple of points from my institution. And actually, I am going to have to fly out my sustainability team from the UK to actually look, because we can't just take what they're doing in the UK. Obviously, theirs is problems with heating, ours is with air conditioning, and we're not going to get people walking or busing because of the services here. So we're going to have a very different strategy here. I can't just take the UK strategy and stick it back.
So to answer that, the first one is probably easy. Come talk to us, we'll help you. And you won't need 8 people to hire. You're right about greenwashing, so that's why I think we were very conscious that our target was net zero and not carbon neutral, right? So to achieve carbon neutral, you're basically just paying off whatever you need in terms of emission. I think net zero is hard, right? Because you're working to your absolute best to reduce your scope 1 and 2 and 3 through your own activities, and then finally offsetting or buying off the remaining amounts that you cannot through carbon offsetting type of arrangements. It's not easy, I agree, and that's why I think we have set ourselves that target till 2030. But it's something, therefore, then that just forces us to work on continuously throughout our value chain, our supply value chain.
Else would like to share? No.
Is this on? Yeah. It's actually on what you were mentioning just then, Chris. So I'm not my company is a solar development company. So actually, I'm entirely biased because we try to help companies to become more sustainable. So this comes from an incredibly biased position, just to kind of caveat it. But what you touched on, I thought was very, very interesting, which is we speak to a lot of clients in Malaysia, Singapore, Philippines, where we operate. And a very common response is, yeah, we want to do this, Ross, but we'll call you once we have our proper plan together, which I completely respect and understand. But I do fear that, people are making, what's the phrase? Perfect the enemy of the good, I think is the phrase, right? Which is, we've got to have a really robust, really, really clear plan for everything before we do anything. And without being hyperbolic or being over the top, time is of the essence, right? And even if it's just banning plastic straws, even if it's just as you mentioned, doing these small incremental things which touch 0.1% of your overall issue, that's a good thing. And I think that the moment that we get too worried about having a really well thought through transformational plan, there is low-hanging fruit to go after. Now, in our business, the reason I get quite frustrated is because you've got a roof, I can install solar, and that's a good thing. And it's cheaper power and all that good stuff. But I do think that there needs to be a careful caveat for big organizations not to get too wrapped up in a really clever approach to everything and thinking through IFRS. If you can do easy things now, please do them now, is kind of is a big message. And unfortunately, I do hear it a lot from clients we speak to, and really big prestigious groups that say, yeah, look, we are going to do rooftop solar, but as part of our bigger plan, I'll call you in 2 years' time once we've done a very big exercise and we've thought through the transformation plan, etc. And forget the solar aspect, just if you can do things now, do things now. And I think that there is a real, I would encourage everyone to think through, those low-hanging fruit actions as soon as they can, because there's no downside in doing that now. So it was just to build onto your point, Chris.
Thank you for that. Anyone from this side of the table? Dato', yes.
Morning, everyone. I do apologize, I didn't get the memo saying that we start at 10. My memo says 11, that's why I came at 11, so I do apologize. I'm from Iskandar Investment, and I just wanted to share with you that we are looking at this in a couple of ways. One of the important things, obviously, is sharing these values with our staff, because many of our staff are senior members of staff, and I think it's important for us to have, as you may know, we have a development program for all our staff every year. So now it's time for us to adjust our development program and infuse elements of sustainable development and SDG, ESG, etc. Right? And secondly, I think we do a lot of programs with the community as well. And I think this is also very timely also for us to share this with the community when we do programs in schools, for example. And like, for example, yesterday we had a beach cleaning exercise with our staff in collaboration with local NGO. And so these are the things that we are also trying to do to promote a more sustainable approach towards the way we live our lives and towards our daily activities. But at a corporate level, we are also assessing new business opportunities for the future, because as an asset management company, obviously we will not be doing too much property development in the future. We are looking at how to monetize our lands, and obviously projects in the area of renewable energy, or like today we're going to be announcing a partnership in terms of solar energy, which is great. So these are some of the things that the board is very conscious about. And as a subsidiary of Khazanah, you mentioned that they've already launched their strategy to transition towards sustainable investment. And as a subsidiary, we take guidance from those programs. So I just wanted to share that a little bit with all of you. Thank you very much.
Thank you, Dato'. Yes. Doctor, you.
Very good morning. Good morning, everyone. So my name is Kamal. I'm with Gleneagles Hospital in Medini. So yes, we've done quite a lot of what the gentleman mentioned. The low-hanging fruits, banning plastics, straws. We went to the beach, helped clean the beach. Things that we can do, we do. But I think from a business perspective, and since we just came up from the pandemic, we are very cognizant of our partners. In order to sustain our business, we need to also sustain the ecosystem that supports our business. And that ecosystem, our patients, of course, the community that they live in, our payoffs, the other industry partners that supports us. So as much as we want to sustain the future, we need to first sustain them for us to live and survive. As my friend Cik Wan mentioned earlier, there are many other companies that need to survive before they can even think beyond the 5-year or 10-year mark. And that is quite important post-pandemic era. We have signed up with Global Compact recently. That is the commitment we have to sustaining our environment and our and planet Earth, so to speak. Right, but I think from a business perspective, when we speak about sustainability, we need to take into context the ecosystem that supports the business beyond the environment only. So I think a lot of the presentation, I find it very helpful. And in fact, most of the things, I'm seeing it first time. But I think it is very skewed towards the environment, as you correctly pointed out, because we are running out of time. We should not, however, forget that there are many other parts to that cog that forms the wheel if we want to move business forward. That's all from me. Thanks.
Thank you. Anyone else? Okay, if none, let's move on to the next question in the interest of time. So I'm just going to go to, I think we all have received the CEO, the guidebook, right? So I'm just going to go to the first question. What are among the reporting standards that the organization is currently using? And do you foresee the ISSB standards to be the one-stop solution in terms of reporting benchmark? Of course, from a sustainability angle, do you have a standalone report right now? What standards are you currently using? And do you see the ISSB as a go-to standard moving forward as well? Comments, thoughts? Anybody using GRI, for example? Perhaps the PLCs here? Is GRI standard you're using? Or are you using, perhaps maybe you're using the Bursa reporting guidelines? Is that the common standard being used at the moment? Yes, anybody would like to comment? Yep.
Okay, my name is Cairo. I'm with KPJ Kluang. Overall, in our group reporting, we do incorporate sustainability, and that is covered in a particular section. It's also cascaded to our hospitals, the whole group of hospitals, that we are required to cover things like water usage, clinical waste usage, and we are required to monitor all this. We've also, on our side, we've also switched to we've stopped using single plastic bags for our medication. We switched to paper bags. However, we are still not able to switch to those little Ziploc bags that you put medication in. We're not able to change that just yet. So, but we've stopped using plastic bottles, mineral plastic water bottles, and all that. So we've actually moved towards that. But again, the reporting is actually on a micro level for us, but we report to HQ. So HQ will have a more macro level of reporting, combining with the what is required by Bursa. So that's what they're actually reporting on. We're not actually moving on a large scale just yet. Honestly, on my side, whenever I see purchase orders that I have to sign, they bought this thick. That's on one given day, so I keep making noise to my purchasers and my accountants that the amount of paper that we use in a month could probably plant about 10 acres of trees, So, but there must be a way for us to actually approve purchases and all those things without having to use too much paper. You've got purchase requisition, you've got purchase orders, you've got whatever other things, So that's a lot of paper, and we use a lot of reams of paper. But the transition cost for us as well is a lot higher to move from plastic to paper bags, So I think we should also allow for all these producers to have a lower cost. So when they transfer to us, it becomes smaller, So that way it's easy for us to switch to using papers rather than plastics. Yes, that's how we do it.
Thank you. Sure, please.
Yeah. We're talking as corporates here. One thing I would say here, just talking about paper, it reminds me that the ministries require thousands and thousands and thousands of bits of paper. Ministry of Health, Ministry of Higher Education that I work with, I know I have to sign about 3,000-4,000 bits of paper to say this is the real passport of my students. So this also has to work at the ministries, because there's a huge waste of effort of sending everything. When you send a thumb drive, but they still want 8 copies of everything. So we need to work with the ministries as well here, not just the industries.
So, echoing the gentleman over there from Newcastle, right? We also find that while we try, the regulatory documents that are filed with SSM, the company's commission, still are required to be hard copy and physically signed. So while I have moved all other documents to DocuSign, The audited accounts, I still need to physically sign that off. They will not accept my electronic signature as of now. But are we engaging with them and various other bodies towards possible transitioning? The answer is yes. Have we had some success in the last couple of years with other agencies? Bank Negara was one good agency that saw the value in this. Most of you now know that for bank confirmations, MIA has now been able to work with Bank Negara to move towards electronic bank confirmations, right? So your auditors no longer need to come to you and ask you to physically sign the confirmation process. Everything is done online. So there is progress, but it'll still take time. I agree.
So if I can just add, sometimes it's not sometimes, I think most times it may be difficult to influence the government to make certain regulation change which impacts private sector. I think this is where the private sector plays their part in terms of both the environmental and the social perspective. If you take, for example, you can't avoid printing, for example, because this is a regulation issue, then the private sector now needs to digest what they can do to minimize the impact, right? One of the pathways towards climate action is actually zero deforestation, right? So maybe the question should be is the paper you're using FSC certified, for example, right? As pointed out, a low-hanging immediate fruit. Are we asking these basic questions? Are we buying paper that's cheapest, that may come from some questionable Amazon clearing source, for example? Or are we buying a little bit more expensive FSC because that's what is required? So these are the kind of, I wouldn't say it's very organization strategy changing questions, but at least it starts that pathway towards sustainability in organizations, which is understood across the different layers of the organization as well. Any other examples of how you're reporting, and what are your thoughts about the IFRS standards itself as a standard to adhere to moving forward in your organizations? Anyone else? Yes. Okay.
I'm Anara, and I think you know me. I'm from IRDA, a government entity. But again, I'm quite happy as well. IRDA is some of you might know, we are the agency that's actually coordinating the development in Iskandar Malaysia. We've been pushing for this sustainability agenda for quite some time. And I'm happy that they're pushing for IFRS exposure draft and all that. That's IRDA as the entity. Now I'm putting my accountant's hat. I think the issue with the standards is always two key things. One is knowledge base, because we talk about the implementers of the reporting, the knowledge base might not be there. I can give you an example. When I was with Ernst & Young about 15 years ago, we had to go and audit a company in Mongolia using IFRS, IAS standards on fair value. And when you get there, the accountants are only cash basis accounting. So I think similarly, when you want to apply for sustainability reporting, the standards need to be not complicated to the fact that, especially if you want SMEs and all that to also adopt, I think even, as I think you rightly mentioned just now, you already got an accountant's degree, doing it for 3 years to get an accountant's degree, and you probably need another 3 years to get an sustainability degree just to understand. So just imagine the SMEs and all these companies. I wouldn't even say that listed companies, sometimes even the knowledge base for them to be able to adopt the standards are there. I think that the transition period needs to take some time. So that's one I think area that needs to be focused on. I mean I'm not trying to be. I mean for Iskandar Malaysia, we would love to have this. Tomorrow everybody be reporting on sustainability. I think the second part is the business part. I think a lot of companies, when they say about sustainability, I mean we've gone and seen a lot of companies, and yes, they do things like plastic bags and all that. But I think the bigger issue is on the business process alone. For example, I can be a cigarette manufacturer and say that my business practices are all green, but the impact on my product is actually not. So I think when you talk about reporting needs to go beyond what's happening in the company, but what your impact of the products that you on the accessibility. I imagine palm producers were a problem, when they're trying to report. How can you start reporting that you're going to be clearing forestry with biodiversity for you to be able to build more palm oil? And there's also the issue about the fiduciary duty to your board members as shareholders to make money. So I think this is where the balance must be played. I'm quite sure the medical fraternity has got a lot to say, especially those who are doing clinical testing and all that. How can you say that you're doing testing on animals and all that? And I think there must be a balance between what can be reported and what can be, I would say, even intellectual property, in terms of businesses. So those are key challenges when it comes to me when you actually implementing the standards. And I've seen it because I when we did it in Mongolia once, when in my career as an auditor, those are the practical issues that you face. Those are the things that I think need to be addressed. These forums are good to give the awareness, but even the fair value. You just imagine now the listed annual report with the fair value requirements and all that is already, I would say, nobody reads it. Nobody reads the annual report nowadays. You start putting in sustainability requirements, put another 30 pages in there. Would it actually be good that the company needs to address this, but would it be actually effective? I think that is the other issue. I'm a strong proponent that you should make it as simple as you can. If it's single figure, you tell me how much carbon you're burning. That's it. You're reporting the carbon, what you're doing. Keep it simple. I think that's be a better approach to applying standards. Thank you very much.
Thanks for that sharing. I think it's very interesting. You're right. There are, for example, BAT is considered a top 3 sustainable company in the FTSE London, right? I think that's where the challenge of ESG, if you just look at numbers without impact, that's where that disconnect happens. So at least in UNGC, we always push towards what is a target that you want to achieve, right? So it's not about the actions that's taken. Are you meeting that target? So the Paris Accord, are you a 1.5 degree company, right? It's not about what the actions you want to take at the end of the day. Now, to your comment about the fiduciary duty towards shareholders in making money. The new sustainability narrative, and I'm not a tree hugger. I come from corporate myself, right? So for me, under no illusions that business need to make money, right? But the new narratives of sustainability is that, like it or not, if you are not taking action from sustainability perspective, you are not going to make money anymore, because businesses depend on natural ecosystems to make money. There is a very interesting report that just launched by Bank Negara, which says that in the Malaysian sector, about 40 to 50% of Malaysian businesses are strongly correlated towards natural-based ecosystems. That means if it goes down, businesses go down. And there's a new report by the Academy Science Malaysia that has put the value of Malaysian natural resources at 170 billion ringgit, $billion, right? So these numbers in terms of value is already put in place. So the new narrative is that if you don't take into this, it's not about saving the world, it's about saving your business moving forward as well. And we are seeing it happening in front of us as we move forward, all this unpredictability that is happening, right? For example, energy prices, we are still low because of so much subsidy the government is channeling. What happens if this goes out and coal is going to be phased out? What are we going to look at that? Back to the point about doing this, you're looking at efficiency, and this is where I think the importance of companies to track science, which IFRS wants to do. Right? If you look at the IPCC report, which is considered the report for climate action, right? One of the pillars for businesses to plug in immediately is actually improving efficiency. They mention it, efficiency is key. So these are the kind of things, this is again the thought process, the reporting cycles that businesses need to take, and how efficient are you as a business as well. So this is again the strategy, the approach that you can take responding to this IFRS approach. So again, Nobody expects to have the best answer. Even developed nations don't have in fact, we are seeing some developed nations are reverting back to coal because of certain crises. Nobody has that answer. But I think what's important is we need to just accept the fact that we are in it together. We've got to do what we can to push the needle, right? And numbers don't lie, right? Let's look at the Malaysian numbers. Malaysia, we are total global emission. Malaysia is 0.7%. You may think a small number, 0.7, not even 1% emitter globally. But if you look again at the correlation of numbers, from an ASEAN perspective, we are third largest emitter. Third largest in ASEAN, behind Thailand, Indonesia, because they are so much bigger economy than us. But if you take per GDP, we automatically become number 1. Even higher than China's per GDP. Right? So if you look at the emissions map, color map, in this part of the world, most of the countries are different color than Malaysia, because we are emitting everybody else in our region. So it's an issue that we need to also see, and how do we handle this. So the new narrative is, if you're not looking into this, the challenge is we're talking about financial sustainability from the 1, 2, 3 years perspective. But if you talk about a 5-year perspective, this is going to affect us moving forward as well. So just adding into that comments. As a moderator, I'm talking too much. Sorry. Anybody else would like to go in? Maybe we'll just go to the last question in interest of time. I'm just going to go into. I think this is a very important, and we have many different representation today. The cross-industry requirements are intended to provide a common set of core climate-related disclosures applicable across sectors and industries. Do you agree with the 7 proposed cross-industry matrix categorizations? What are your thoughts? Do you agree that we should have a common set across? Can we have a common set across all industries to compare? Apple to apple, perhaps. Thought, comments? Should we have? Can we have? Yes.
Sorry, as per my earlier point about treating companies of different sizes, different industry, and different stage of companies, short answer is no lah, because I think it has to be adapted to the sort of the company's present context. Number 1. Number 2, as a suggestion, because I mean it's very telling when you ask us about agreement to standards, why there was very little response, because it's not yet really trickled down to us. That's a question you should be asking our shareholders. I have my 100% shareholder there, but it's not him, but it's the one above, which is Khazanah, EPF, and KPRJ. We have representation today. So that's one. But if I could just ask, can we in a way reframe? We saw that the statistics at Johor not great lah, yeah. But we do have a very strong and I think committed state government at the moment. And I think if we are working as sort of a state, because IFRS is a compliance approach lah. So the mindset is always, do I comply? I don't comply. What if there is a bit of more of an aspirational approach? So because I mean you can hear from most of us, kita nak tengok cakap pasal standards and all, it's a bit difficult because we haven't gone through it. We hear from Prof. Chris, for example, where's the expertise of advisors, etc., which Manu of course responded to. But the thing is, can we do a sandbox? Because I think it will be a lot less scary for companies in this room if we actually voluntarily say, okay, what's the good things for us to be measured for our company at this context that we're in? And can we understand the impact of those measurements? Because once you do reporting, financial reporting, or IFRS for sustainability and climate, that one is macam, it's already, when once the ink dries, you're sort of dead lah, again, because it's there. But if we take a bit of a sandbox approach where what's 2-3 measures that we feel would be most applicable to us? Because in the end, where does the line of compliance connect or interconnect with the line towards business? Is when we can get the right measurements that also drive our business, which also drives the compliance and meets the goals. Because it's scary when you say, oh, do you agree with these standards? We kind of say, yeah, maybe. Again, it's a bit scary because we haven't done it. You know, and I do agree with the timeline that's been given. I think if you want to do it by end of this year, it's susah lah. It's quite difficult. But if we do take a sort of phased approach, you know, and I love the idea of sandboxing most of the time, because you will get companies who want to voluntarily say, yeah, help me grasp with this reporting, because I don't at the moment. And if there's like-minded group of companies like your network that you mentioned, then let's do this as a Johor thing lah, you know. Or of course IRDA will support Iskandar Puteri punya initiative measures, and I'm going for some grants from you soon. But if it becomes more of an aspirational approach as opposed to a compliance approach, I think we may have more success.
Thank you. Any other comments? No? Yeah. Yeah. Any comments, thoughts? Maybe something on the sandbox? Volunteers? Yeah, oh, that's a volunteer already. No other comments? Yes.
Sorry. My name is Hatta from PTP. Yeah, in PTP, because our clients actually majority from international line, the biggest of our biggest customer. Basically, because they are like their customer is actually one of the top biggest suppliers or retailers in the world, like Walmart and Targets and H&M kind of thing. So they have been pressured from their customer to implement. Then, you know, of course, sooner or later they will come back to us as a port operator to implement the ESG. Okay, we are in PTP actually we have come up with the framework. I think we target like this year we're going to have our own framework, and then we have identified actually the our carbon footprint, and then we have actually going to present to our board, you know, our timeline to meet the Paris. We go for minimal requirement first, you know, by 2030, whether we can achieve that 45 reduction in the carbon emission, right? So, but my personal opinion is actually when you want to implement this, actually looking at the economic situation now, because when you look at the numbers, what hour you want to present, you know, for instance, you want to reduce the carbon emission. Actually, one of it's actually if you study your requirement, one of the factor or you can use actually to buy the green energy from Tenaga Nasional, but it will cost you a surcharge of 3.7 cents per what is it per kilowatt. So okay, that is fast when you can reduce that, but it's actually additional cost to your company. But looking at the now situation, which is actually the main problem now is the inflation, right? So I think for me it's not going to be easy to implement this. Because when you calculate the numbers, everything, okay, you can reduce, but it comes to your cost. So of course, this is a short term, but you have to look into long-term perspective. Of course, long-term will have all those benefits, right? But the challenge is actually short term, whether you can have that time frame and to reach the by 2030 the 45% reduction in the carbon emission. That's my point.
Yeah, I mean, this is the age-old sustainability conundrum lah. Can we afford to do sustainability? There's always that conundrum lah. But I mean, this one is a debate that will never end, depending on which side you're on lah. I will always spend money side. So anyway, but I think just going back to your example, right now we know inflation, short-term pressure is very real in front of us, and this is also where the need for entrepreneurism in sustainability implementation. And entrepreneurism in sustainability actually means taking advantage at the level of forgiveness for first movers in this space right now. Because the rules like IFRS is still being set in motion, right? So you got a good 2 years window to experiment, to see what works and what doesn't work before Bursa and other guys really tighten the screws. So I'll give a practical example. So you said about the MGATs lah, green energy attribute, right? If from a TNB perspective, it costs you 37 ringgit per megawatt hour. And on average, a manufacturer perhaps will use about 20,000 megawatt hours per year. But in the REC criteria, you can actually, market-based is accepted criteria for RECs. You can actually consider buying the RECs from Sarawak Energy, which is only at 4 ringgit compared to 37 ringgit. That's the price difference. So you can still do this. It's not emissions. RECs is not emissions. It is a claim mechanism that you're using renewable energy. You can still reduce your calculation footprint by doing these RECs, but from Sarawak instead, right? Of course, you may argue, but the grid is not connected. But again, this is where first movers get the advantage, because REC allows market locations. And in Malaysia, when we report our NDC, our National Determined Contribution, we don't say Peninsular Malaysia, Sarawak and also Sabah. We say Malaysia. We combine everything. That means that the rules of the game allow us as a country to claim immaterial where the energy source, whether or not grid connection at this point of time. So if you move fast, you are able to enjoy that 32 ringgit discount. If you move slow, maybe the rules will change and it'll cost you so much more again. This is where that first mover advantage comes into play, and that entrepreneurship thinking is very critical for embarking on sustainability, because everybody's on cost cutting, but there are a lot of interesting measures right now for first movers on this. Anyone else? Sorry.
Just a quick add-on to that. I'm sure you all have heard the discussions about carbon tax, right? And most of you know that Singapore has already introduced it for certain of its highest emitting industries, right? Currently, I think it's at 5 ringgit Sing. $5 Sing dollars, right? $5 Sing dollars, and it's going to go up to quite high in about 5 years' time. So they're being very strict. You can bet your bottom dollar that Malaysia is going to think about it. And some of these additional taxes may even come in and be legislated at the state level, right? Given that the state owns the land resources and the state has got certain rights, right, under our constitution and our national legislation that allows them to impose some of this. So going back, echoing Feroz's point about first mover, right? How fast do you want to move, right, towards net zero or reducing your footprint before it becomes costly to you or too costly to you to maintain your business profitably? Thanks.
Any other comments?
Just some final thoughts, since Encik Wan pointed at me. So yes, I'd love to join your sandbox. All right, just tell us when and where. But a few points to make. The first one, let me just qualify that, of course, if you can't sustain the ecosystem and the environment, you won't have a business to run. It's a zero-sum game, right? So even though we understand and very cognizant of the challenges we face, we are very committed to a sustainable business, a responsible one, so that we can all flourish and prosper together. Regarding the paper, it's not just the education system, it's the Ministry of Health as well. The number of papers we have to submit and the number of papers we have to put in, it's tremendous and it's a waste. The point I'm trying to make here is, as we engage the CEOs of the private company to move the needle in a meaningful manner, the policymakers must first do that. And there must be some consistency between aspiration or what they aspire to do and what they actually do. All right, and knowing Malaysia, we are a very last minute kind of nation. So we do not want this to come in 2025, 2026 and say, oh no, this is not aspirational anymore, it is compliance. That is something that we do not want because it is very disruptive to business operators. And last but not least, regarding the standards, I am not familiar with the standards you've mentioned, but in the healthcare side, there are many standards that we follow. We've got a lot of accreditation bodies coming in, local and international. You've got Malaysia Society for Quality in Health, you've got the Joint Commission International accrediting us every 2-3 years. And I'm sure we can somehow merge and see where these standards can fit into yours, because there's no point having so many standards and submitting them to Bursa for licensing purpose. And I think that is something that I'm willing to sit down with the team to look out for. Thanks.
Just to qualify, the IFRS is not a UN-led standard. It is a combination of various reporting standards that are coming together, trying to create a common standard across board. So which you know, even them also, they got turf war game, right? So so it's something that hopefully will come because it will make life easier across board.
So I'm a medical doctor, so I don't see that. I don't understand many of that. All right, but a lot of things that we do in a medical fraternity can be applied. So as the gentleman correctly mentioned, a lot of things we do, the impact to our world is huge. All right, we shouldn't be looking at it from a standard perspective, but on an impact perspective on what we actually do to the society and community as a whole.
I think that's really good points. How do we look from an impact perspective? Anyone else? Yes, Lindy.
Thank you. Answering to the question that was raised by Faros just now, it was talking about whether is it possible for 7 industries to share the common measurement metrics, right? The question raised by you just now.
Yes, correct.
Right. From a different perspective, in my experience coming from private sector, actually, last year we faced the issues of workers' accommodation, where the government actually require manufacturing and also construction to build workers' accommodation based on the similar standards, very similar to the question that you raised. Across our industry, it is very, very hard because, let's say, for the nature of manufacturing, where their site and accommodation is very permanent. Whereas for construction, project-based, it could be for every single phase, let's say 100 acres, it will have a 5 years accommodation. After 5 years, they have to be shifted to another site. Right, it applies to every development in Malaysia, right? So it will not be permanent. So we face this issue. If one rules applies to all, it would not fit actually. So it would actually answer to the question just now, right? If let's say 7 industries share the same metrics, potentially we will face similar problem. Other than that, from another perspective is from financial institution point of view. Currently, what I'm facing is bank is actually asking for ESG compliance already. So when it comes to loan submission, banks are asking, especially foreign banks. So they're asking for developers to comply with ESG. But when we ask further than E, everyone, when we look at ESG, is so much focused on environmental issues. We have a lot of tool sets to measure the E factors, right? Even as today, we talked about water, we talked about heat. How about the S and the G? So we then ask the bankers for clarification on S and G. A lot of them can't answer that as well. Because as for E part, we have got a lot of assessment. We got environmental impact assessment, and upcoming we hear that Malaysian government will be having social impact assessment for development as well. So any development that has got more than, if I'm not wrong, 1,200 units, we need to comply. We need to do this SIA report, where we didn't have to previously. But then again, we would not know what to expect for the social impact assessment as well. So it would be good that if we can, for UNGC to actually educate more or emphasize more on the S and also the G part to private sectors, and also maybe even to financial institution and all, so that we have a common understanding on this. On the environmental, I think a lot of us has got common understanding, but not so much for the S and G. Thank you.
I think those are very interesting and valid points. How do we push the S approach? So I know, for example, one of our members is Bank Pembangunan. Of course, they are development. So they actually do have an S element in which they actually decided to proceed to finance a affordable housing scheme because it provides more affordable housing from an S perspective. But diving into the sustainable finance, this is another area where businesses at this point of time can benefit because they actually offer cheaper financing if you are meeting ESG. But eventually, you will actually lose out because you won't have access to financing. And we have had complaints by the ONG sector, by the utility coal-based sector, who say that it's very hard for them now to access financing because of the nature of business. And for me, it's a bit sad part, right? I was speaking to the Chief Sustainability Officer of Maybank. So Maybank last year has said that they will provide 50 billion ringgit in ESG or sustainability-related financing. 50 billion, He said last year, or was it this year, they gave 13.6 billion out. I said, but most of it went to Singapore. Because difficult to find Malaysian projects that qualify for such things. So it's a missed opportunity if you are not also thinking. So finance is going to be the big trust. Bank Negara is pushing this aggressively. Bank Negara has something called the Climate Principles Taxonomy, which is now changing the way banks are looking at credit profiling, because it becomes a mandatory thing for banks. So very soon your bankers will ask you, not just show me your P&L, show me your GHG baseline, show me all this.
Actually, I've already asked. So in future, we are expecting bank not to disperse loan when you do not fulfill the ESG requirements.
So these are the new types of questions that will come from a financing perspective, and this is how also will impact your businesses. An interesting point, and I just found this out quite recently. In Malaysia, when it comes to sustainable financing, the bank gives an incentive. So you get a discount on your interest for the duration, right? But overseas, it's not an incentive, it's a disincentive. If you take that financing, you don't meet it, they penalize you with higher rates, right? Which I thought was a very interesting. So I asked the banks, when will this come to Malaysia? I said, Malaysia not ready yet. But again, first mover advantages if you're moving into this, and especially where financing sectors also trying to figure out what do we need to qualify for things like that. This is an advantage for you all to go for the low-hanging fruit because they'll agree to it first. But once more and more cases come to play, there's no more low-hanging fruit. It's going to be business as usual, more difficult standards we put in place. So again, first mover advantage on this.
So just to add on the S, I'm glad, ma'am, you brought that up. You can see that the standard setters will eventually come out with an IFRS on social disclosures that are needed. What will be the baseline? Again, at this point, very hard to be sure. We all know of the 11 ILO labor indicators. Will that eventually form the basis for disclosure? I suspect yes, but are there other general labor requirements or social requirements, social legislation in respective countries that will eventually form part of a new standard, a disclosure standard? I think the answer is also yes. Is there a need to focus also on the S and the G? I agree, absolutely. I think for those of us here based in Johor, I think you all have heard the example of what happened to Atta IMS last year, right? That's a very famous case, right? Of how once they were cut off from Dyson, right? From being their main supplier, they lost 80% of their business. And being a public listed company, you can imagine what that did to their share price and their market cap, right? Overnight. So, is that a risk to all our businesses? Indirectly, yes, if we are also not looking out for the S. The G perhaps may be somewhat easier given the advances Malaysia has over the years in terms of, say, the MCCG disclosure requirements, in terms of some of the other corporate governance codes that have come up, even some of the basic governance requirements that are already embedded in the Companies Act. So it may be easier eventually for the IFRS to lean on some of these existing codes and of governance, etc., when they develop their exposure standard. Now, there is one question from a panelist, which I just want to call out. They said, hi, would there be any tax relief from the government to boost the sustainable disclosure for business entities? Okay, at this point, I think in terms of complying with the disclosure standards, it remains to be seen how the government's policies will be in terms of tax relief. We all know that the government is already currently providing tax relief for certain green type of investments, right? There's a green investment tax allowance. There's, for example, certain allowances or reliefs given for solar panels and solar related equipment. Some of you have there is discussion that the FY23 budget that will be announced at the end of this year will include further measures, right? Although for the first time you're hearing not about just the carrots, but you're hearing about the stick also. So it will be interesting to see what is eventually announced by our finance minister. But I guess to answer the panelists, the virtual panelists, I think in due time, these will be some of the further incentives from a tax perspective that will be given. And taking on board first comment about sustainable finance, in the same way that banks are now offering special interest rates, right, for sustainability financing, you can also imagine that the same can be applied to corporate income taxes, right? So is it worth your while to invest? Because instead of paying 24%, you might get a 2% discount and only pay 22% in corporate income tax. So these are again some of the things that as a first mover, being ahead and being prepared will eventually put you ahead of the others and in line to be the first persons to be, I guess, taking advantage and benefiting from some of these when they come in. Thank you.
Is the corporate income tax already
No. At this point, no. But there is discussion about just like how some corporates this year are facing the so-called cukai makmur, right? So using that same basis with a sustainability lens.
Thank you, Mano. I think time is up. So before we close the roundtable, I just want to just add a bit. From the IFRS angle, it all starts with a strategy, right? And the strategy then drives to the targets that you want. I mean, the data that you need, and that data then of course have to be audited that it's real. And that's the gist of the IFRS approach. The most important is doing your strategy, and I think what we've heard in the discussion is there is a challenge for private sector to create strategies around ES and G, right? Because it requires a different approach to your business DNA, even to your DNA level. So we realized this at UNGC. So in 2020, we did a global, engagement with many private sector actors, big and small. And one of the challenge from a sustainability and SDG perspective, you look at the boxes at the back, right? SDGs is not written in business speak. That's one of the fundamental challenges. It's written in policy speak. So how do businesses connect the dots to this? So we launched something called the SDG Ambition Benchmarks, which is basically translating the 17 goals into 10 actions written in business speak. And in that 10 actions, we've set the high, we said something of raising sustainability ambition lah. So our benchmark means zero deforestation, 100% kind of things. But that is what we aspire. Businesses can set their own targets, but it provides you a sustainable business taxonomy to set your strategies that then can be reported vis-a-vis the IFRS standards. So in these 10 actions, I think, if I'm not mistaken, one is on governance, and that's very clearly for us is anti-corruption. Because fix corruption, you fix a lot of things. 2 is on social. Out of the 2, 1 is on gender diversity. The other one is on living wage. And the rest is on environment, because that is the most, as Linda said, most advanced and easiest to look at from a number perspective. So I would recommend, if you want to start your RFS journey, please do consider looking at the UNGC benchmarks as a start to look at your strategy approach. And Eddie and myself and our Johor office is more than happy to engage and connect, to speak and share more about this moving forward. So with that, I'd like to thank PwC and EduCity for co-organizing this with this roundtable with us at UNGC Malaysia, and see you all soon. And I must say I do a lot of engagement in the Klang Valley So when I first invited for this, I told Mano and Eddie, I said, not bad you're speaking about this topic, because even the so-called perceived more sophisticated corporates in Klang Valley so takut on this topic So I must say, it was really nice really nice that you all stay. So thank you all much and see you all soon. Thank you.
Thank you very much, ladies and gentlemen. Thank you to all the participants for your feedback and recommendation to the ISSB in the developing sustainability disclosure standards.